record this. Okay, and we're ready to go. So welcome, my name is Daniel O'Connor. I'm a coach for innovation and for inventors who want to take their projects from an idea all the way through to money. And in that case, it could be lots of different pathways. I work with, I coach them. The whole idea is I impart my process to people who need that, and they own it afterwards. So you only ever have to work with me once. I wrote a good little book for those of you who want to understand the process and have a map of how to track along to do this. Includes things that we won't be covering in our 6 steps, which includes things like crowdsourcing, crowdfunding. We don't actually handle that in 6 steps. I'm not a great fan of crowdsourcing and crowdfunding, but that's beside the point. I give it to people and show you how to get the hungry herd and bring them along and why that's important. But today is all about the transitioning from an R&D company. You're working on your idea, you've been getting proof of concept, market validation, you've now raised a bit of money and you're ready to now transition to become a commercial entity. It might not be a profitable entity, but it is going to be a commercial entity. The whole idea is you take from here to pre-scale. At pre-scale, that's the time we bring in a venture capitalist private equity fund to take you to the complete next level. That's where you may be doing, let's say, $5 million a year in turnover and not really making money, but we can present an argument or a case for venture capital to come in and turn that $5 million a year into $5 million a month. And it is a process, and that's a process that you may not ever have to learn, but it is a great one to know. It's not something that we want to teach you, but we want you to stand you alongside the people who know it so you can learn it from them. And in the meantime, you've got to get from where you are with, the assumption is you've just raised capital. You now need to get to pre-scale. So you're making turnover and you've proven everything works. You want to then take it to the next level. So if that's the case, then you're in for a treat if you feel that that might be somewhere where you've a little bit light on in the past. Now I'm going to share my screen now and we're going to get started. For some reason, it's dropped out. I'm not sure why, but I'm going to keep going. We've got people on board. I hope everyone can hear me again. For some reason, I've just had a dropout. I've not had that before, but I'm hoping it's not the new mic we're using. Okay, so let me share my screen with you, and I'll get this all fired up. I first have to start up my program for PowerPoint. As I mentioned before, this is all about transitioning from I've got a great product, now I want to get I've raised some money, now I want to get this to a profitable enterprise or get it started to prove that it's going to be a profitable enterprise. So let's now share the screen. I can't even see that. So I'll just go to share screen again. Here I am. Okay, apologies for that. I don't know what went wrong. It was pretty, I'm having a few difficulties here today because I've just changed the mic and I had a couple of dropouts, and when everything drops out, it drops my PowerPoint as well. Okay, so today, module 4, transitioning your R&D project into a business venture. Big change for a lot of people, and it's requiring that you wear hats that you probably have never worn before. So, and I'm going to walk you through why you shouldn't do this on your own. Okay, so let's get started. So first, some background on the 6 steps, which is important for you to understand where we are right now and where we fit in within the 6 steps. So if I can just go through that. Firstly, 2 things you need to understand. Commercialization is a linear process. We start with A to B, B to C, C to D, and if you miss out on any of those steps, you're going to be dragged back to complete that step, or it's going to cost you value in your project at the end, or you may not actually be able to commercialize or sell it. So be very careful about all of the steps. Each one is important, and this one is the most overlooked of all. The second thing is in front of each of those steps, there's a major roadblock. And if you're not careful, you'll crash into that. And if you know what to do, then you'll scoot past it. And that's the whole idea, to give you a map to navigate past the steps from where you are now to where the next step is that you need to do. So what do they look like? First is ideation and modeling. So that's where you've come up with the ideation, you've sit down and said, well, I've got a little widget and it's got this, it's got that, all the features. Let's say it's a bicycle. I've got a bell on the left and I've got handbrake on the right, and I've got the gears and I've got this and I've got that. And it's a little bit different from all other bikes because that's the ideation. The modeling is nothing about the bike. It's about how do we find the people who need that bike or want that bike or want to swap the bike they've got, or where do they go to buy bikes, and work out exactly from the market out, what we call outside in, from the market all the way back to your bike. So that sort of modeling pathway is important for us to know that ultimately you will be able to tap that market for exactly what you want and for how much you want, because you've tested everything all the way through. That way you don't go all the way to patenting and commercialization and raise money and then find that your bike's too expensive or nobody wants it. So understanding that, ideation, modeling. After that becomes ownership and protection. Now, when most people think of this, they think, oh, patenting, but we don't. The patenting is a very important process, particularly if you're going to be licensing, but patenting should be timed. The most important part of patenting is actually timing, because if you patent early, then within 12 months, if you're not commercial, someone's got to pay for the conversion of your patent from a provisional patent to a full converted patent. And at that point there, you need to come up with $50,000, $60,000, $70,000. If you don't have the money, you're not going to convert that patent, because the project won't have earned that money and certainly won't have it in the bank. You can't expect the project investors to come in and pay for the patent unless the project is earning money by that time, because there's no evidence that the patent is worth it. So what you need to do is start a provisional patent as late as you can and protect it all the other ways right up until that date. And then from the day before, usually the day before we accept money, we take a patent out, provisional patent, and we run for 12 months and get enough cash flow in a project that the project can pay for the patent conversion. That's the important part of that. Next is funding. We handled that last week. For those of you who know, it's quite a different way of doing this. Our funding process doesn't work like conventional funding. We don't use the corporate model the accountants use, and we don't use the university model. We have one specifically for small investors, and it works remarkably well. From there, today we'll handle transitioning, which we'll talk about today. Scaling is where we've got your transition from an R&D company now to a trading company, but you're not necessarily making profit or good profit, and you've got the potential to. That's where we look at making what you've got 10 times, 20 times bigger and better by bringing in expertise and reframing the whole thing. And finally, the exit. Exit's all about getting you the best value you can for the project at a certain, what we call a value realization point. We don't necessarily say that you have to get out at that point, but you do have to have some sort of value realization, and so do the cornerstone investor or shareholder that you brought in at funding, because at that time, that person has said, I want an entry, but I also need an exit. And you need to give them an exit at some point. And at that point, they can choose to exit, but they can choose to stay on if they want. But you've met your obligations in terms of exit options. Okay, so today, I want to start with a question, as I always do, for those of you who aren't new on this. The question today is, how many Formula One drivers do you know rebuild their own engines in between events? Now, I would warrant to you that most Formula One drivers have a very good mechanical knowledge, and they could rebuild an engine anytime they wanted to, but they never do. There's a very good reason for it. Firstly, they're better drivers than they are mechanics. But secondly, they know they've got better engineers working on their projects than they're just doing it themselves. So as a result, these guys are smart enough to realize they delegate. And you need to understand that although you might be the face of the Formula One team, you're not necessarily the best engineers. And so therefore, the engineer himself is somebody else, and you need to delegate for what is required for when it's required. Now, I see many inventors get their funding and then crash because of a number of reasons. They spent everything on early patenting when they didn't need to. They need to protect the project, but they don't necessarily need to spend everything on patenting. Next, they try to do it all themselves. And this is a big mistake that nearly everyone makes. They go in there and say, well, I'm the best at my recombinant DNA tagging process. therefore I should be the best at running the company that is going to do that. And that's actually not the case at all. A lot of them work on too many projects at once, and they are then responsible to other investors. But more importantly, when you're working on one project, somebody else is looking over your shoulders thinking, are you working on that project when I'm paying you to work on my project? What's going on? Why don't I own a piece of that project as well? And it creates a whole different level of anger and investor relations difficulties that you don't really need. And finally, they had to constantly hunt for more money. Hunting and begging is a process that now spreads out over a year, maybe 2 years, because you keep running out of money. And every time you go back to the market, you're trying to dilute yourself, but more importantly, you're trying to dilute your previous shareholders. And they, in turn, will now lose the value that they had. So you don't want them to walk away from that. So as a result, they're going to force you to dilute yourself rather than dilute the whole project, and you're going to end up with, and I've seen somebody end up with 6% of his own project, but because he had to keep going back and hunt for more money, and because he didn't budget it right, and he tried to do it all himself and learn on his time rather than anyone else's. So today is all about teaching you 3 things. We've only got 30 minutes together, or 45 minutes with this. And the problem I have is this is a 3-hour session that I normally do in our weekend workshop. And so I'm only able to give you 2 or 3 things. Today is just 3 things. I'm going to teach you why you need to delegate tasks to the right specialists, why time is critical in this phase, and why making it to cash flow positive is absolutely everything in this. And finally, what currencies you have to negotiate with before you have cash flow. So let's look at this. The first, I've changed these around a little bit. First one is delegate the expertise. So if you've got yourself to a point where you want to, you're trying to do it all yourself, you might be the expert in that particular subject matter, you might be the expert in that particular product or project, but you're not necessarily the expert in managing a project, or project managing, or driving a project, or managing accounts, reports, everything else, and hiring and firing people. Chances are, if you're a really good scientist, you're not a very good accountant, lawyer, maybe a project engineer, HR person, sales, marketing person. All of those skills are needed. They're not necessarily needed right through the project, but they're going to be needed along the way. And if you're not able to delegate, things go wrong. Let me show you why. I want to talk about a construction process innovation that almost never happened. Now, this was a really, really good project, I can tell you. I was very impressed with it. To give you an idea of how this worked, without giving too much away, it's not a patented process, but we had an engineering consulting firm who were able to build concurrently upwards and downwards at the same time on multi-story buildings with basement car parks, etc. They quoted on an extension to a shopping centre in Australia, and that they quoted, the original quotes were around about 110 million. The owner didn't want to do it, said come up with something else. These guys came up with something. They built it better and quicker, and it cost $78 million. That's a really big saving, really, really big saving. Now, as a result of that, they had a process. So we captured that process, and we then raised some money, put it all in there. We got a project manager who was a very experienced international engineer to run this. But the problem I had was the 3 partners in the engineering consulting practice, well, 2 of them are really good cooperative, very cooperative, and understood that they were engineers and they were not project managers. The 3rd one believed he was the best at everything, and we could not convince him that he should not be in charge of this project. And as a result, he was fighting with everybody to a point where all he wanted was control. And we refused to give it to him, because giving him control meant that he was going to spend money on things he doesn't necessarily need to spend money on. And as a result, I can tell you within a year, one of those partners had moved to another state. Another partner got very ill and retired. This guy was on his own. The person who put the money in, who was the project manager for it, walked away. The whole project never happened. And it was a method of saving around about 40% on building costs. So you can see this is huge, and nothing can happen until, unfortunately, that guy, the principal of that engineering consulting firm, who's in his 80s, I might add, retires. When that happens, that project can actually go back and make money. So it's basically put on hold until then, all because one person decided he was the best in engineering and therefore should be the best in project managing anything to do with engineering, including high growth enterprises, which he'd never done before. So you want to avoid that. That project stalled. The people that put the money in walked away, and they're going to come back in time, but right now, nowhere to be seen. And so I don't want projects to end up like that. You end up a mismatch, which if it doesn't fit, it doesn't fit. And no amount of squeezing can make it work. If the person, I've had confrontations with people where they've said, okay, I'll give up, I'll let someone else handle it. And generally I find that they don't. They end up, it becomes creep. They start picking on that person in project status review meetings, and I can do better than that. And pretty soon they're trying to get into the driver's seat again. And it's a total waste of time for everybody's time. Okay, so let me keep going here. Putting yourself in charge is a very dangerous thing. High growth enterprises are really tricky. If you haven't had any experience in a high growth enterprise, you don't know how to manage, because everything is on the move. Nothing is stable. When you've got a project that's very stable, then you've only got one or two variables that are moving. But with a high growth enterprise, everything is unstable. Everything is moving. It's like running across a mountain that's in a landslide. Everything is moving. If you don't know how to work with it, you'll get covered in it. Let me tell you, I had another project which a very clever man, that's Metropolitan Area Network, which is still used today, and that was 40 years ago we did this. A university did it, some people within the university. We trade sale half of it to a very large national, telecommunications company in Australia. And the first thing they did was put their people in charge of it. When they did that, they taking people from, if you know the Boston Consulting Group Matrix, they took cash cow people to run a star project. And so they were looking at conserving cash, they're looking at saving things, cutting down costs. And as a result, they killed the project. And it took about 10 or 12 years before the original owners were able to buy that project out from underneath them and relaunch it. So that's how long it can take to undo that sort of project if somebody is going to try and be a manager of a high growth enterprise with no experience. Now, if you need legal advice, you don't become a lawyer. People think, I can go online and pull down agreements. I can find non-disclosure agreements and everything else. Yes, you might. You don't know whether they work or not in your jurisdiction, and that's because you're not a lawyer and you pay for that. Now, you don't need a lawyer every day of every minute of every project, but you will need one from time to time. And for that, you need to find somebody who you can tap for a few hours work here and a few days work here when it's needed. That gives you the security you need without having to pay the big salaries. When you engage contract specialists for a single task, you're taking control of the project in a different way. They are responsible and accountable for that particular task, but ultimately they report back to the project status review meetings, which you should chair. So, and that's how you manage those, but you don't try and dive in and get them to do it. You don't pull salary to do it yourself. Nobody's going to pay you to learn on their dime. You need to learn how it's done for next time by peering, looking over someone's shoulder to understand how they do it. Some specialist areas like preparing accounts, etc., aren't going to happen. So in a case like that, don't worry about it. You're not going to be in charge of this. You're just going to learn a little bit, and you understand if the guy goes off the path, and if you want to change, you know how to brief the next guy. You don't try and learn on the investor's dime, which is what happens ultimately. People put money into the project and you say, I can do this, I will do this, and therefore you sit back and let me do it. And as a result of that, they're going to, you're going to be very slow in doing all this sort of stuff. But the people who put the money in want speed. Everyone wants speed. And if you can't keep up, then ultimately your competition will. So I want to show you a little bit about how this works in terms of an ascension model to take you to the next level. So first we start with you as the creative. So you come up with this idea. At the ideation and modeling stage, you're a creative. You're not necessarily an inventor. The inventor then puts a commercial model around it, and that becomes you. You can grow to that. But once you get to the inventor, you have a choice. You either let go of invention and become the next level, or you bring in the right people. And the next level up is the entrepreneur. Now, ultimately, every inventor should become an entrepreneur, but most don't. Some choose not to be. But every entrepreneur doesn't necessarily want to be an inventor. So once you take your first project through the invention phase, you then become the entrepreneur if you're able to learn from these people, the experts you're bringing in. And ultimately, it does make sense to go back to being a creative again and finding your next project. You're better off just taking other people's projects onwards. But that's your ascension model that you need to understand, that the roles completely change at every interval. And that means you grow or you choose not to grow. If you're not the entrepreneur, that's okay. The person with the money is probably going to be more of the entrepreneur and will help you in that regard. It doesn't mean to say that you failed in any way. You know your limitations. That's far better than somebody who doesn't know his limitations and wants to spend your money or the investor's money on learning how to do it. That's crazy. Okay, so understanding the ascension model is important for you, and know where you're going to be within that and where you're going to stay within that if you choose to. Okay, now I'd like to show you how to achieve your commercialization window. This is important because by the time you take your money, usually when we go in and pitch for funding, we're showing people the provisional patent because they're all under non-disclosure and non-compete agreements. We're showing them the provisional patent that we're going to lodge the day before we accept a check from them. So once the due diligence is all done, we then lodge the provisional patent, and then we start the process. We receive the money, and we've got 12 months from that moment to the time that we have to convert that patent if we choose to. And we don't know yet whether that patent is going to work or not, but putting out a few hundred or a few $1,000s to get a provisional patent lodged is not a big deal. Okay. Now, before I show you this, I just want to talk a little bit about why your project can become a liability when patent deadlines become dominant. So I've seen this so many times, and I need inventors to understand very early, running off and getting a patent doesn't always work in your favor. It becomes a liability. When I see people looking for investors, the more desperate they are, it's because they're getting closer to that patent deadline. First question I always have, and it's the same with any investor, when is your patent due for conversion? And people say, oh, I can withdraw my patent and release. No, you can't. If you do that, you've lost your priority date. It starts again. If somebody has come up with something in the meantime, then you're fighting them as to whether or not they have a priority. So right now, the most critical timing is your conversion date. And if you work on your conversion date at that particular point, then you work backwards to what you need and how you need it. And that means you need to have the money to convert. Now, the project doesn't raise money to convert. What you do is you actually would raise capital to commercialize, but not to necessarily to pay for patents. So unless the project can generate enough capital to pay for the patents, then you're pretty much wasting your time because you've not proved that the patent is worth patenting. So it doesn't matter how big it is. And I've seen a company with 121 patents. They converted them all. They raised capital on the public market. This was for a internal combustion engine derivative. Failed horribly. They made money because 2 of those patents were in a little area outside of the combustion engine, and they were able to commercialize those, and we still use them today. This was a process for misting very viscous products. And we use that in nasal sprays and things like that these days, but they were using it for fuel injection for 2-stroke engines. So you can tell that it was quite a big step away in terms of patent. But they did that, they made money on it, never made a cracker on the internal combustion engine technology, which was a great engine, much better than anyone that was using at the moment, but it doesn't work if it doesn't work. Okay, so understand, if you're going to take money from people, you've got that sprint of 12 months to get your patent converted, to have enough money in the bank so you can afford to convert the patent. If you can't, then you're going to be in trouble. It really is going to come down to you being able to pay for it from the cash flow or pay for it from your own money, because you shouldn't expect the project to pay for it. That's not what should be planned anyway. Okay, so how does it all this apply to you? Well, let me show you. You've got a 12-month sprint from the start where you receive your cash to your cash flow positive event. So if you want your project to survive, you have to get to that. You have to have enough money in the bank to pay for your patent conversion. Otherwise, you lose. Firstly, you've cut off licensing, because without a patent, you can't license. But secondly, you are inviting people who have been in the project or seen the project to now go and copy it. And all that's holding them is your non-disclosure agreement, which I hope you didn't get off the internet, and your non-compete agreement and all the other clauses you may have built into that. But if they've signed it, they may even still just go out and challenge you, and big companies will do that. Now, if you've had a look for more funding, further dilution will be from your share, not from other investors. That's an important aspect, and that's why I've ended up with somebody with 6% of his own company, because he had to keep going back and raising more capital, and everyone was lining up behind him saying, I put money in on the expectation you'll be cash flow positive. You've made the mistake. Therefore, why should I pay for that? You need to take this money out of your share, not out of my share, or give the equity out of your share. Now, if the project slows down, others will jump in. Now, that's internally and externally. I can tell you, jumping in from internally, people are going to say, you're not performing to the tune that you said you would, therefore, you're the broken part. What happens to a broken part? It gets replaced. But externally, if companies are looking at what you've got and you've tested with markets and people understand what you've got and it looks pretty good, they're going to start to nose up alongside you and build something fairly similar. And if you slow down, they have time to jump in and snatch your market from you before you're even there. So what does failure look like? If you don't meet the deadlines on budget, you failed, not the project. Any reasonable operator will replace the failed component. That's what you do to keep the engine going, or whatever it is. Now, how will you manage your investment from the outside? And that's ultimately what happens. If you fail, people are going to push you aside. You've still got equity in the project. Nobody's going to buy you out because it's not worth anything yet. And you certainly wouldn't want to sell for peanuts. But at that point there, you're going to be trying to look at what they're doing with your project and your investment, because you put a lot of investment into it and you still own equity into it. From the time you're out to the time it becomes, you reach a value realization point, you can't do anything and you're at their mercy. And it is very annoying, very, very annoying. And I've seen people try to step projects up against themselves, their own project, in order to build something else, because I was so frustrated with what was happening with the team that they recruited and they got investment from, that kicked them out because they were not able to get the project over the line. Okay, finally, your currencies. Now, this is an important aspect of commercialization, and it goes right back to well before funding, because there are times when you need extra facilities and it doesn't have to be money. And I want to show you why. Now, before I tell you about this, I want to just share a quick story with you. Last week, for those of you who were on, we talked about the project that used water saturated with plasma to wash produce, which killed all pathogens on the outside of that produce. Therefore, we got avocados, for instance, we've got a 17-day shelf life instead of a 5-day shelf life. Big change. We got a funding organisation in, and we at that point there, we needed $1 million. We got $500,000 to pay for the machine, and we put the machine into the investor, into his packing shed. So that was fine. Now we've got $500,000 worth of other costs, including equipment, skills for CNC, a control box, developing a printed circuit board, switches, all of that sort of stuff, all the way through. And instead of giving the project cash, we asked that investor to pay the bills as and when they became due. So what that meant was that investor was able to then become a collaborative research partner on the project and take a tax deduction on that under Australian tax law. Now, I'm not a tax law expert and I don't want to give you tax advice, but having someone contribute to pay bills as and when they fall due, they are taking responsibility for those bills. They're able to swap the outcomes of that research work for equity in the project, and that's all pre-agreed, of course, good or bad, because sometimes the outcomes of the research isn't necessarily good, it still has the same price. But ultimately what it means is that contributor has not put cash into the project. They may have put like $500,000, paid the bills. Therefore, under an R&D tax concession, they can get 46 cents back in the dollar. They're only putting in $260,000 instead of $500,000 cash. So it shows you how you can actually reduce the exposure for the other person as a leverage, and therefore build their goodwill on that as an ongoing thing. And that's far more beneficial for you if you do run skinny on money and you need to get access to a spectron microscope. You don't necessarily want to buy one, but you want access to one. You find a competitive, somebody with one and with the expertise to operate it, and you say, okay, can we negotiate something to give you some equity in the project? And that will work very much in your favor if you do that right. So let's just jump back into this. That was a project I needed to show you how providing services can be as part of a collaborative research partnership ultimately means that that player can give the same contribution you need, because you actually, if you get cash in, it makes no difference. You're going to spend it on those things anyway. You might as well get the cash as services that you're going to be spending it on. It's far easier for people to reach into their resources and give you services rather than reach into their bank and give you money. So some currencies you may need, and I'm just going to give you some odd ones. We've got 20 or 30 different currencies we use when we negotiate, and this starts way back at beginning of funding all the way through to the end of at pre-scale, which is the end of this transition period. So some of these include placing their name on a paper or a patent. Now, I've done that quite recently. We had a patent out of Pakistan and Malaysia. The two guys wanted to break into the American market, or North American market, because it was mostly into Canada. And this patent was around a process for CBD oil. And so what we had to do was find somebody prominent in the CBD oil industry, and we found the guy who ran the US agriculture program, which USDA ran a program for 21 years, cultivating and breeding different types of cannabis. They cut that program about 20 years ago, but they kept all the knowledge. And the experts on that, one of them was reporting to the desk of the Deputy Surgeon General of the US, and that guy's he's now part of a technical advisory panel we have in the US on another project that I had. So I tapped him. He came in. He's put his name on that patent. There's 3 people on that patent now, and he didn't get any money for it. All he got was his name on the patent. As a result, it raised his prominence. It showed he was backing research, but more importantly, he was now getting the profile into the industry that he wanted, because he really liked the CBD business, and he, particularly for veterinary applications, but he didn't feel that he was able to do that just by walking back in. He was Deputy Surgeon General during the George W. years, so he'd been in private enterprise for the last 12 years and not really had a profile, and this was going to raise his profile within the CBD or the cannabis industry. So he was able to do that quite effectively. Access to equipment, skills and facilities. I've just talked about a spectron microscope. If you needed to analyze something, then yes, sure, the skills to run it and the machine, that doesn't have to be purchased. It can actually be traded. Next is claiming research funding. As I pointed out, a collaborative research partner actually makes their own R&D tax concession application and takes all those funding in. It is for a research project. They are a collaborative partner in that project, and they're swapping the outcomes for equity, so therefore they're big players in it. So that gives them the opportunity to start claiming that, and it reduces the amount you're actually asking for. Community goodwill and public relations. I've had a project the first one I had on this was in 1987, and that was a very large mining company who put in $2.1 million Australian, which is in today's money is probably 200 million. And they did it for one reason, so they could go to the community and say, look at us, we're investing in, this was for clonal eucalyptus trees, which grew in 1.5 times the saline content of seawater. So the idea was to take them out to salt pans, sink these little trees in, and they grow themselves. They would survive, and they would stabilise the soil, and therefore drop the salt table down, and then the farmers could actually reclaim some of that land. So it's a very clever idea, and they needed a benevolent contributor. They got that in a mining company. This is a mining company in aluminium smelting. It tells you who it is. And that company had recently found a gold concentration in the middle of their mine. So they wanted to know what to do about it. So eventually they were going to make an application to the government to set up a gold mine, which they did, and they sold that off, but it's still operating within right in the middle of their lease. Their lease was on different metals, not gold. And so they had a public relations problem to try and get this. So what did they do? They gave away $2.1 million for an R&D project for farmers. And they said, we will use those trees for reforestation, making sure that when we finish with the mine, we're going to rehabilitate it. We'll plant trees there. These will be the trees we plant because they can be harvested after 12 years. Great idea. They won that. They got the gold mine. By the way, that gold mine paid for itself in 8 weeks. I've never heard of a gold mine that could pay for itself in 8 weeks. Next, I've had a client who's come back and said, the person in charge of the project that you've got is a very prominent national figure, and I'd like to have a seat on the board with him because that'll raise my profile. And that person, who was a business migrant coming in, said, give it to me, I'll do it. And he put in, ultimately, he put $1.1 million for the right to sit alongside this high profile operator. So that can happen. So don't underestimate it. It's not ego, it's really he knew that it would raise his profile enough for his friends, colleagues, work, and our fellow investors, that he could actually get into other projects. Don't know how successful that was, but there you are. That was what he was prepared to pay. Now, I promised I'd teach you 3 things today. I've messed them up in order, but that's okay. Why delegate tasks to experts will save you time, and time is more important than money at this particular point. Why time is critical in this phase, and why making it to cash flow positive is absolutely everything. Because if you don't make it to cash flow positive and you have to go back and ask for more money, it's going to come out of your pocket, not out of the project pocket. Also showed you what currency you have before you have cash flow. So that's important, so you can keep trading up if you need to. There's emergencies there, but it's not money. Okay, so how did I do? I hope I was able to give you what I promised. Now, if you think you may need help understanding all of this, I've set aside some time in the next 48 hours to speak to just 15 people. We do this every week. I make available in my calendar 15 slots for those of you who are watching. You can actually jump into this and make a booking and talk to me for 45 minutes on a strategy call. Whatever your biggest problem is, I've solved it for someone at some time in my career. I've been doing this for 37 years. The chances are I've handled it hundreds of times. If I can solve your problem, you walk away in 45 minutes and you've done pretty well. But really, it gives me a chance to look at your project and gives you a chance to look at how I can actually work with you. So now this is not for everybody. It's for, if you're an independent inventor, if you're a member of a small R&D team, if you're willing to change from the way you've been doing things and accept that there might be another way. And if you understand you need to own these skills for future projects, and so you're not looking at somebody to just come in and do it for you, but rather teach you on a one-to-one or one-to-many. One-to-many is a lot cheaper than one-to-one, let me tell you. Then by all means, you're someone that I want to talk to. Now, if you can say yes to all of this, then you should book in for a 45-minute strategy call. It's free. There's where you go to. If you have your phone ready, just take a photo of that, and you'll be able to then put that into the browser line and book in. I can tell you, some people from last week who missed out are probably 30, 45 minutes ago, we're already diving into that. So there may not be that many left, but give yourself a shot. Now, from there, if you're investment ready, you can go and get a checklist here and take another photo of that if you want. Making sure you're investment ready is just a really quick quiz online, and within 5 minutes, you'll know whether or not you've got all the attributes needed to get this across the line. For instance, for raising capital, you need 3 main things. You need independent market validation, you need proof of concept, and you need a transition audit. A transition audit is to show to a third party that you've actually done everything you've said you've done. Think like, for instance, so we get people with inventions, they come back and say, well, I'm ready to go. It might be software. And we say, okay, show us where your manuals are, your operator's manual, installation manuals, your troubleshooting manuals. Oh, I haven't done that. What about your packaging? What about your distribution agreements? What have you got in place for all that? How are you going to do service and support? Oh, no, we've only done the software. Well, you're not ready yet. So we go through all of that. And here's what is the best way to check yourself. And I like it when people have done this and are able to give me a score when they come online for their 45-minute call. People come in and say, okay, here I am. I got this score. What do you think? Am I good to go? And we work through their process from there. Okay, well, thank you very much. Now, today, we're going to move now to Q&A. Going to try and do a little bit differently. That is, I want to unmute people's mics and get you to talk, for those of you who'd like to. So if you have questions, I'd welcome them now. Great content, thank you. This one's a little bit dry, and it's also not as sexy or exciting as what we have normally, because there's no crush on you to do this. But if you do it, you'll actually save and make a lot more money in your project than you otherwise would. Does anyone have questions? Type them into the chat box or put your hand up and I'll unmute you. I can't see anybody in chat here that's asking questions. Feel free to ask questions. We had a lot of questions last week. We had a lot of questions who missed out and came back and wrote them online, but I haven't had any this week. So does anyone have anything regarding any of these? It's all fairly straightforward, but it takes a bit of understanding of why these are critical. If you don't do it, ultimately, your project will meander. Do you need it for licensing? Yes, you do. If you've got a licensing project, you still need to, we try and not sell a license just from the ideation phase. If you set up your model, prove the model, and then make available as the project's going up, your licensing fee goes through the roof. So if you want to get 5% of the sales value, or 5% of wholesale on a license fee, and you know what that license fee is going to be, then ultimately you can pull that straight into a license agreement and say, I'll get a median average of what I expect that you're going to do, and I'll lock in that quarterly fee, and that's what you pay. So you can do that a lot easier if you've already got cash flow, because at that point there you can show what you can project as the net present value of future earnings. That's a great little trick to make sure that you can do it. Okay, what else have we got here? Would you expect a board role in a startup? Me, I tend to not do boards. I rather do technical advisory panel. A technical advisory panel doesn't have the onus or responsibility or legal handcuffs that a board would have. I am on the board of companies. I'm chairman of a public listed company that has 41 patents and in the biotech space, and we do pretty well with those around the world. And I've been there for 8 years, so I'm breaking my own rule, but I helped them out early and then got involved in it, and I really don't see myself getting out. I probably will get out this year or next year, but every time I go back to the board and put myself up, people tend to want to keep me on there just as a bit of a foil for others. I don't mind that. I don't do boards for free. I don't do technical advisory panels for equity. Most of them are done for equity, by the way. We generally do a series of options over 18 months, and it's really subject to the number of meetings you attend and participate in. And the participation is just as important, and you get judged on that by your peers. So if you choose to turn up for meetings and don't participate, you don't get your options. So, and if you turn up at one meeting, you get 1/18 of what's being offered over an 18-month period. So, okay, are there other questions? 5 board members in total, including myself. I tend to not do that for a board. It depends on your structure. If you're a public company, that is a limited company that's not proprietary in Australia, or if you're a LLC and not an Inc. in America, then I would have 3 board members because that's the requirement. But otherwise, I'd keep the board down and I would keep the technical advisory panel up. Understanding that the power really is in the CEO, the president, or the general manager. It's not necessarily at board level. Board level is only overseeing what the project is doing. So if you take a proper role of board doesn't make decisions on day to day. And that's where a technical advisory panel comes in, because they're looking at all of the different business units are reporting back to the technical advisory panel on a weekly basis usually, and they can see if something's going wrong. They're managing the task sheet and they're seeing what is being done, and they are able to call to account the general manager or the president and say, this isn't being done. Can we allocate it to someone else? Do we need to bring in more help? Is the person you've allocated this to competent or incompetent? And we can do something about it very quickly, because you need to respond really quickly. You can't afford to have dead weight in this period, because ultimately they're burning money that the investors have put in. The investors will think that because you're allowing someone to burn money, then you're the broken part as well. So you'll get optioned out, which is not a nice thing to do, finding yourself on the outside of your own company. Let me see. For startups, it's easy to offer stake to board members. However, if you can be an advisor, again, stake might be interesting. As startups have access to small funding amounts. Well, I would suggest that you come online to this, go back into, I'll just give you a link. This is 6easysteps.com. Look for module 3. It's a free six module course that I put in there. It's a teaser course, very much built around what we're doing here today. This will be number 4 in there as of in an hour's time. For those of you who want to, you can go in there and look at number 3, and that'll show you how we actually raise the money. It's a completely different way of doing it. It's not hard. Pulling people in a board position gives control to people that otherwise shouldn't necessarily have control. Just because someone has money, they may not be the right person to put in expertise. We make sure they are, because we don't take money from people who don't have industry or market expertise. It doesn't make sense to in our model. So if that were the case, yes, they become partners more than they become investors. But that doesn't mean to say they should be on the board. And going on the board of a company could mean that accountabilities that you're not readily aware of. And I've been on boards where accountabilities, I've seen directors and officers insurance literally quadruple. Within the last 2 years, I've been on a board that's done that. So you don't want to have to face all that sort of stuff. The link, yes, here it is again. SixEasySteps.com. So for those of you who take a snapshot of that, now that's all the 6 steps. There's a 7th module in there, which is all of them. You can have a look at that. It's a 3.5-hour module, but a little bit more detail. Now, what you can do is go back to module 3. We're at module 4. We've just done module 4. Congratulations, you survived it. If anybody wants to go through that, I'm more than happy to keep going. But for those of you who have questions about funding, that's okay too. But you probably need to look at the other one, the other module. Now I'm just trying to look for anybody who had hands up. Anybody put their hand up for a question? No, it doesn't look like I'm getting. Yep, not too many people coming through with questions. That's interesting. Last week we probably had 20 or 30 questions. Now this means I've either done really good in explaining it, or I've done a really messy job and nobody understands what I've just been talking about. But either way, I hope you were able to get a lot out of this today. You can go to 6 Easy Steps and keep the journey going. You can meet me again at the same time next week. And if you want a replay of this, it'll be available in the next hour or so on 6 Easy Steps. Now, we just got one more question. Would you advise crowdfund options if I can't get grants? I don't like crowdfunding. If I just very quickly cover this, because we've got some time, nobody's asking questions. Crowdfunding works for if you plan it right. Now, what people in the crowdfunding sources don't tell you is that there are hundreds of thousands of crowdfunding options that come online every hour across the world. That's a lot of noise that you have to get above. So if you want to be successful in the crowdfunding, and I've seen them be successful at one which was to do with a bicycle. Now, the reason why he was successful was two reasons. One, his product was tribal. That is, bike riders talk to bike riders and they get on to each other. You need one of these. It's really good. I've used it. And everybody looks at it, said, yeah, kicks the tires. I don't want that too. They go out and they buy the part. So he knew that the word of mouth would spread to all the bike clubs and everybody wanted it. So he had a hungry herd built up. But then on the day that he launched it, he had already started building a database, and he told everyone, we're going online on, let's say, April the 1st at 9 o'clock on this crowd Kickstarter or whatever it's going to be. And we're going to be selling these for $100. They're normally $180. You'll be able to buy one on that day for $100, but that's the only time you get it. And if you do, I'm going to give you a free t-shirt and something else. So he directed his hungry herd to, at the moment that they launched, and he was able to get sales within the first half hour. What happens then, like any online service, the algorithms pick up, oh, there's some activity there. So they then elevate that project and start promoting it. And when they start promoting it, then it gets seen worldwide. So his project not only was tribal, not only did he bring his hungry herd to the moment he launched it to get, so they could buy direct, rather than, they couldn't buy from him, they had to buy online. And yes, he was losing 8% or whatever it's going to be. He didn't mind because he knew the value of that. At the end of that, he had a big hungry herd who had purchased. He showed everyone this is a good product. Look at that. In the first 5 minutes, 100 people have placed their orders and the project is off and running. What happens? Everybody who owns a bike will look at it and they'll tell their friends when they buy it, and off it goes. And he did remarkably well. Now, that is not an easy thing to do. It takes a good 6 months to build your hungry herd. You have to have newsletters and everything else, websites, and you have to be blasting out to everyone new tidbits, updates, software enhancements, everything you've got. You need to be feeding them over that 6 months to a point where you drive them all to that one particular point. So within 5 or 10 minutes of you launching your thing on to a crowdsourcing program, Kickstarter, whatever it is, people are going to react and buy. At that point there, you become an interesting party. Other than that, you're just noise, and you can get drowned in the noise. There's a lot of good projects, never get anywhere because of that. So, okay, anything else? Doesn't look like there is, so I'll call it a day. 6 Easy Steps. Feel free to come in at any time. Next week, same time, we're handling scaling, which is a great one. Scaling is not necessarily where you're going to be the expert at it. It's more about where we actually pull in the experts to grow your project, 10x your project as it's known in the industry, take you from what you're doing per year to what you should be doing per month. So we'll work on that. So I look forward to seeing you next week. Otherwise, you can write to me. You've got my email address because you come here, or you get me on LinkedIn, Facebook, etc. So by all means, write to me if you have any questions, or get onto that 45-minute strategy call. Okay, thank you very much. Goodbye.